commodity prices are projected to continue rising on the backdrop of the global economic demand and inadequate supply. However, the outlook remains highly uncertain due to elevated geopolitical risks, which could lead to supply disruptions and intensity price volatility, especially in common commodities such as wheat, maize, and sugar in Africa. CNBC Africa spoke to Kwolek, the founder of Kulea Africa, for more.
We've got a fairly multifaceted situation going on. Obviously, the crisis in the Red Sea and the Suez Canal is having a fairly major impact on, firstly, the supply chain, and secondly, the prices. So, if we start with the supply chain, we're seeing delays in shipments, much longer shipment times, and this manifests itself in short-term, supply pinches in certain markets. So you find that a certain market can run out of a given commodity, whether it's sugar, whether it's maize, whether it's wheat, for example. And then obviously you have, a massive increase in freight prices, whether it's containers. If you look at container freight from West Coast India to Eastern Coast Africa, for example, that was circa $20 a ton. Today, it can be as high as $70 a ton. If you look at Indonesia, it was about $50 a ton. Today, it's more like $150 a ton. So this is affecting the commodities prices significantly across the region.
Okay, great. And in terms of the anticipated trends in terms of maize production and also pricing for Kenya, what do you foresee in 2024?
Look, we're in an El Nino year. As we've all observed in this part of the world, we've had excellent rains, almost too good in certain parts. Kenya and Tanzania, maize prices are beginning to creep up as the end of the harvesting season comes to a close. But if you look at Uganda and Rwanda, the harvesting season just beginning, and therefore prices are a little bit lower. Obviously, we're in a deficit region for maize, so we're going to have to rely on South Africa. We're going to have to rely on Malawi. We're going to have to rely on Zambia. And we just have to see how the weather looks ahead. We're hearing that there could be drought conditions following this very wet weather in East Africa, and that could put stress on the maize crop going forward.
Okay, great. And even as we look at these common commodities, some of the most affected include the wheat during, of course, being exacerbated by what was happening in Russia and Ukraine war. Therefore, looking at this year, how is the wheat market expected to evolve in terms of both supply and demand in the Kenyan market in the near future?
Yeah, well, wheat is one of those special commodities that it's getting it from all sides, as you rightly pointed out. The breadbasket of the world for wheat really is Russia, Ukraine. They're dealing with a serious conflict that's been running for quite some time now. Those boats are full of wheat for milling have got to come down, Black Sea down through the Suez, all the way down the Red Sea and into Mombasa, into Dar es Salaam, to supply both the coastal countries and the hinterland countries. So, wheat is a commodity that's been heavily affected. So, shipping rates have gone up. They were already very high because of what's going on in Russia, Ukraine. Those rates have gone even higher today because trying to get a ship insured to go all the way down through the Red Sea is becoming increasingly difficult. There's plenty of owners that are brave enough to send their ships down there, but it does mean that we are looking a little bit tighter on that side, and prices are moving up. So wheat, there's plenty of supply, good supply coming out of the Black Sea, but logistics make it very, very complex. So I wouldn't be surprised to see some pinch points around the wheat markets across the Eastern African region during the course of 2024.
Okay, great. And as we look into Mata Sugar specifically in Kenya, we've seen most of the sugar manufacturing companies try to be privatized by the government. This is in a bid to make them a little bit more profitable. Therefore, looking at the specific sugar outlook in 2024, might this affect the consumers and also the industries in Kenya as far as privatization is concerned, and also whether or not the prices remain stable for sugar?
Well, if you look at Kenya, this privatization committee has been trying to offload these mills for the last 20 years without success. The main problem being that, the mills are dilapidated and they need a significant amount of money spending on them. And that is one of the main problems. Having said that, we are, and this is not just Kenya specific, it's across the region, maybe with the exception of Tanzania, but we are in the midst of a currency crisis. If you look at the Kenyan shilling, in the last 12 months, it's depreciated from 100 to the dollar, or 110 to the dollar, and today we're at about 166. So there's a huge depreciation. But what this does do is finally it means that imports price in at a very high level, and it means that actually milling sugar in Kenya as a foreign investor looks pretty attractive today. And so maybe finally we might see one or two of these factories that are a slightly better condition get privatized and actually brought back up to speed. As a miller, there's plenty of money to be made today. As an importer in Kenya, prices have crashed. The government issued a lot of licenses. They needed to get the price in Kenya down. They did so. Plenty of sugar's come in. Prices are down here. If you look at Tanzania, across the border, it's the total opposite. Prices shot up by around 35% in Tanzania over the last 2 weeks. Government brought in price controls yesterday, and they've managed to calm the price down. They've also issued around 150,000 tons of import permits. So there's plenty of sugar on the way to Tanzania now, which should calm the market down a little bit.
Okay, great. And so far, it's in January, and still we're seeing the high rates of the increasing inflation as well as the weakening shilling. But then, in lieu of the consumers, how then do we ensure that we have a stability and affordability in the common commodities in the market?
So, unfortunately, with the shilling depreciating and production of major commodities such as maize, wheat, and sugar being in a large deficit this year, it means that we have to rely on imports. But the simple way to get around this is, as you alluded to, we've got to try and get these mills privatized, increase the production in Kenya. Last year, I should say last year, in the year of 2022, 2023. Kenya had a very, very small deficit. That deficit grew by 300% in the year of 2023, 2024. So, if we can get back to a point where Kenya doesn't really have to import sugar, they don't really have to import maize, they increase their wheat production, then this is one of the ways that you're going to find stability. But until that time, we're going to remain extremely volatile, especially with what's going on in the Red Sea.
Okay, great. And is diversifying exports and also market destinations and enhancing domestic resource mobilization likely to help Kenya as a country and also East Africa deal with the issues of the rising prices of commodities?
Yeah, having a better balance of trade, more exports to the world, it brings in more foreign currency revenue, more euros, more pounds, more dollars, for example. More renminbi, more yuan, whatever it may be. At the moment, we are very import-led economies in this part of the world, not export-led, and that, it's only exasperating the currency crisis that we're experiencing. And until, the countries in East Africa get on top of that, this problem is not going to go away anytime soon.